Gold is closing in on $3,000 per ounce, and if the trends we've seen continue, it could go even higher before the year is over. But what's really behind gold's rise, and where do experts see it heading for the rest of 2025? Today we're breaking down the key drivers of gold's price, expert predictions for the months ahead, and why gold continues to stand out as a safe haven asset. And if you're wondering how gold can fit into your financial future, well, stick around because we'll also touch on a little known option that lets you hold physical gold in a tax-advantaged account. Gold's price has already shattered expectations this year. A year ago, some analysts predicted gold would hit $2,300 or $2,400 per ounce sometime in 2025. Instead, gold blew past $2,400 by summer and hit $2,950 per ounce by February. That's a 25% increase in 2024 alone, driven by demand from central banks, inflation concerns, and global economic uncertainty. Gold's strong momentum could continue thanks in part to massive central bank purchases that show no signs of slowing down. Goldman Sachs also pointed to U.S. federal debt, which has surpassed $36 trillion, as a major factor driving gold's appeal. According to the Congressional Budget Office, interest payments on this debt are expected to exceed $1 trillion per year for the next decade. Combine that with persistent inflation, and it's easy to see why gold remains a popular hedge against economic uncertainty. Now, looking ahead, experts believe Federal Reserve policy could have a significant impact on gold. The Federal Reserve has suggested it may cut interest rates in the second half of the year. Historically, lower interest rates have boosted gold demand. And while many analysts remain cautious about long-term predictions, others expect gold to continue its upward trajectory through mid-2025, driven by ongoing central bank accumulation and growing investor demand. As gold's strong start to the year has outpaced early projections, many major investment firms have revised their targets upward. Goldman Sachs initially estimated gold would end 2025 at $2,890 per ounce, but now they've increased that forecast to $3,100 per ounce. Their primary reason? Continued demand from central banks looking for a hedge against inflation and economic instability. Even with gold's strong outlook, analysts caution against expecting a smooth ride. As Joseph Cavatoni of the World Gold Council points out, gold prices are influenced by multiple factors, including the U.S. dollar, interest rates, and global trade policies. He expects some price fluctuations with potential dips below $3,000, but the overall trend appears strongly bullish. Now, if you're wondering how people today are holding physical gold as part of their financial strategy, well, here's something worth knowing. Goldco is offering a free gold and silver kit, which explains how precious metals IRAs allow you to store real gold and silver in a tax-advantaged account. And here's the best part. You could even qualify for up to a 10% instant match in bonus silver and a free Ronald Reagan half-ounce silver coin. But this is first come, first serve, so if you want to learn more, click the link in the description. Gold has had a remarkable run, and the rest of 2025 is shaping up to be just as interesting. With record central bank demand, economic uncertainty, and potential Federal Reserve rate cuts, the factors driving gold higher remain firmly in place. While price fluctuations are always possible, experts agree that gold's long-term appeal as a hedge against economic instability remains as strong as ever. So whether you've been following gold for years or just starting to pay attention, this year is proving once again that gold's value isn't just in its shine, it's in its ability to weather financial storms. Hey, thanks for watching and stay tuned as we track gold's journey through the rest of 2025.